Hello, everybody. JD here with your Rational Trader Market Analysis Daily. In today's video, I'm going to be talking about the arbitrage in the volatility market, specifically the short exchange traded fund SVXY relative to the actual volatility index, the VIX. So we have an active trade working right now in the SVXY. Really excited about the trade. It's fascinating to watch the markets deal with their emotions, and those emotions are projected in how the volatility markets function. And therefore, when there are dislocations, it takes some doing to get that correction, but ultimately that correction will come. So last Friday, and here's what's interesting and why I wanted to talk about the volatility arbitrage correcting today. We entered the SVXY on Friday at the open when the volatility index was trading right around, it looks like 16 and change, really 1620, let's just call it. And you can see where we closed today at 1664. That is higher than where the volatility index was when we opened the short volatility on Friday at the open. One would expect that when volatility goes up, the short volatility ETF that is supposed to track, step for step with the volatility index, one would expect then the SVXY to be lower. And you can see here that is not the case. We entered um, the SVXY trade, if I can get it quickly here at the open, right around 42.65 was about where we opened the SVXY. And you can see we closed today at 42.69 or fractionally higher. So you have volatility going up, but you also have the SVXY moving opposite, which one would expect when the volatility index is increasing. I find that really, really super, super interesting. I think you should as well. If you entered the SVXY fading volatility trade, I have an upside target of 50 on this trade. That's some 20% or thereabouts from current prices higher. So really, I think we can get that here in the month of July. That'd be a nice day's work for anybody by all accounts. So uh, the arbitrage is correcting. It is painfully, painfully slow. I would like to see this arbitrage corrected and get out of Dodge and then actually pivot the other way. At some point in mid-August, I'm going to be long volatility, but I think we have this period here where market forces are moving in a certain direction, and the SVXY can try all it wants to resist that force, but eventually that arbitrage is going to correct. And that's my message here to you today, because in this last few days of trading, we see it ever so slightly beginning to correct. That's all I have for today, folks. Tomorrow is podcast day. It's a holiday on Friday. I will be back on Monday with another video. And on Monday, I'll be breaking down that really fun mean reversion cash machine trade in Constellation Brands, which is winding down today. You could have closed that trade for approximately 10 cents. Got a little pricey there, got up to a 15-cent price to close the trade at the close today. I believe when I last checked the options, you could have closed that spread for about 10 cents. Remember, you pocketed on all four legs of the trade, you pocketed a credit of $1.10. So spending 10 cents to wind it all down leaves you with a dollar in your pocket. And that's what I'm talking about in the cash the mean reversion cash machine. So I'll break all of that down on Monday. Again, happy 4th of July, everybody. This is JD. Take care. Have a great day, and we'll see you all next time.